This was a heck of a year for stocks as equities rallied big, way above historical averages, close to triple, but we lost a little bit of it here in the last couple weeks since December started. In fact, we're ending 2024 with quite a bit of a cliffhanger. The risk radar got plenty red and green for you for your holiday. The only thing green right now is the dollar, though, as equities buckled a bit. Crypto broke down, and bonds have been selling off majorly with yields moving higher. Let's first look at the stock chart. Just going to run through these real quick as we are out next week. Got some holiday programming, going to rest up. Hope you do as well. Here's the chart that explains the yellow light on stocks right now. If you were to just go tech, it's green, green, green. It's beautiful. Equities have been well supported by the MAG 7 MAGS ETF, up 74% this year. Wow. Just an incredible resilience. And by the way, that's after a big reset in valuations for the big tech giants. S&P's at 26%. That is one heck of a year. It's a great year. The Russell up 11%, was close to being on par with S&P's after the election, but lost it. Because this now traded below the November election level, you have that representing a whole side of the market that's been under pressure. Value trades and pretty much a lot of stuff still outside of tech. There was this big breadth rotation, kind of fell flat in December. Look at what's happening for bonds and the dollar. These two go on the same chart because you can zoom back a good bit and see the point loud and clear. Firstly, the 10-year yield had this downtrend going, and then we kind of peaked above it here. So the 10-year looks like it needs to go back maybe and test this level from earlier in the year, which is the high of about 4.5%. If it gets through there, then suddenly you're looking at long bonds in the benchmark 10-year back to maybe 5. You can envision that happening pretty quickly. The other thing with the dollar, and this is where things start to get a little bit surprising and possibly negative in terms of positioning and narrative and things that you've heard after the election, in particular, the notion that the dollar is going to be going down and that there's all these negative pressures on the greenback. It simply has been once again disproven by the market, and this time around the technicals were really interesting for the dollar because the dollar is actually finding support at its old highs from last year and the previous. That's pretty amazing stuff. Basically means that the dollar now is finding support on that to try and break out in a big way, which could disrupt some of the assumptions that investors have right now in building their portfolio, because the stronger dollar does generally go up with yields too, represents a firmer than expected economy, represents a Fed that probably can't cut as much as people thought. But that again was also the story of this year too. Remember how many rate cuts were expected this year, and we only got 100 basis points, 100 and then or 50 and then 25 and 25. So that still was way below expectations. Stocks can do well even without the Fed's help. It's one of the most important messages I've been trying to pound the table on all year, which is root for the firm dollar. You don't want to construct policy around getting the dollar down. The only thing that might be good for is people who are speculating against the U.S. and whatever asset benefits from that environment you don't really want to be in. Big tech is on its own. It's doing great. It can do just fine with some of these slight changes to the plan on the macro side with yields up and the dollar up. And then finally, of course, Bitcoin, BTC, the outperformance next to gold, but actually note gold is trying to find a little support, right, as Bitcoin might be rolling over. That could express a little bit more of that cliffhanger nature of some of the extreme risk-on behavior just cooling off. Maybe it's just because folks need to take some profits to go buy some gifts for the holidays. We'll find out in a couple weeks. I'll see you in the morning.